We sleep better when we call them accidents. When we wake to find our savings evaporated, our pensions halved, the numbers on the screen bleeding red, it's almost comforting to shrug and say, well, these things happen. Accidents, flukes, tiny acts of God. But history whispers something far more unnerving. Every crash has a heartbeat. Every collapse leaves fingerprints, smudged with ink and sweat and the particular scent of human ambition. Amsterdam, 1635. The air smells of herring and hope. In a tavern on the Damrak, a modest merchant named Jan offers 12 acres of land for a single tulip bulb, not the flower itself, but a promise of one, a paper dream. The bulb is a Semper Augustus, swirling red and white like frozen flame. The price climbs not because the flower is magic, but because the story is. The story says tomorrow will be richer, that if this time is different. By 1636, everyone is in. The baker, the cobbler, the widow who mortgages her house. They don't realize they're not investing in flowers. They're investing in each other's hope. And hope, when leveraged, becomes a very heavy thing to carry. February 1637. An auction in Haarlem. The Viceroy bulb is ordinary. The auctioneer calls the price. Silence. Someone coughs. The price drops. No hands raise. In that moment, with a sound no louder than a held breath, something invisible breaks. The buyer doesn't show. The buyer always shows. But not today. Word travels like plague, by footsteps, men running to sell their notes, finding buyers who have vanished. The price doesn't fall. It evaporates. No, a nice was a noise. A tulip that could buy a canal house at dawn is worthless by dusk. But the debt remains. Jan's mortgage remains. His children will pay. Their children will pay. The future he bought and sold in a tavern becomes a chain he drags for life. They wrote the blueprint that day, not just for flowers, for every crash that followed. Take something beautiful. Inflate it with belief. Watch what happens when belief runs out. But the blueprint was not forgotten. 3 centuries later, the same hunger found a new object. Paper promises, printed by the thousand. London, 1720. The city is drunk on paper. The South Sea Company promises trade with South America. Rivers of silver beyond the horizon. Never mind that Spain controls those waters. The idea is enough. The British government, drowning in war debt, strikes a deal. The company will take on £30 sterling million of national debt and issue shares backed by the Crown itself. Parliament passes it. The King governs it. This isn't speculation, it's patriotism. Sir Isaac Newton buys early, sells early, then watches the price climb, and climbs back in at the peak. He will lose £20,000 sterling. He will say, I can calculate the movement of the stars, but not the madness of men. He dies without understanding. The madness was the point. In the alleys of Cheapside, a milkmaid trades her savings for a single share. In Westminster, a lord mortgages his estate. The crowd outside the subscription office is so thick that 3 people are trampled to death. They die not for gold, but for paper. The share price rises to £1,000 sterling. At its peak, the company is worth more than Britain itself. Then someone asks, how will they actually make this money? The directors stutter. The price wobbles in August. It collapses by October. Parliament convenes. The king weeps. But here's the cruelty. They bail out the company, not the people. The scam wasn't a crime. It was policy. The nation didn't lose money. It lost the illusion that the crown could protect its people from fantasy. Tuesday, October 29th, 1929. The ticker tape machines fall silent. Not broken, overwhelmed. By 10 a.m., the ribbons can't print fast enough to record the hemorrhage. And in that silence, the screaming begins. The sound of 1,000 dreams collapsing at once. Meet William. He has a wife in Brooklyn, 2 children, a house with a mortgage he took last spring. Confident his General Electric stock would cover it, he stands on the steps of the exchange, holding a slip that was worth $30,000 at breakfast. By lunch, $8,000. By dusk, a bookmark. He doesn't cry. He lets it flutter from his fingers, joining the snowfall of ruined futures on the pavement. By evening, the Dow has fallen 12%. But percentages lie. They turn horror into math. What they don't tell you, an entire generation's creed, tomorrow will be better, has shattered. That creed dies not with a speech, but with a silence. The silence of a ticker tape that can't keep up, of men who can't pay, of a nation waking to find its reflection is now a stranger. The market didn't crash that day. A worldview did. The market simply stopped lying. Monday, October 19th, 1987. The machines are ready. The humans are not. For years, Wall Street has built portfolio insurance, computer programs that automatically sell futures if the market drops. Set it and forget it. A thermostat for a risk. By 87, $100 billion is wrapped in this digital cocoon. The morning starts normal, but somewhere in the fiber optic veins, a threshold is crossed. A computer sees the S&P 500 fall 3%. It sells $500 million in futures in 15 minutes. The insurance works perfectly, but protection at scale becomes contagion. When that first machine sells, it drives prices down further, tripping another circuit, selling another $300 million. A cascade of zeros and ones, moving at light speed. David at Morgan Stanley watches the Dow plunge 200 points in 3 minutes. He doesn't panic. He goes numb. He is watching his future erase itself in real time, and he cannot keep up. The machines don't panic. They simply execute. And that is the horror. For the first time, the market isn't driven by human emotion. It's driven by human emotion reflected back at us 1,000,000 times per second. Our own face in the mirror of code, screaming. By close, the Dow has fallen 22.6% in a day. The worst in history, not from war or fraud, from pure algorithmic panic. Black Monday wasn't a failure of technology. It was technology doing exactly what we asked, faster than we could say, stop 'em. The market didn't crash. We learned that our own reflection, when amplified, is the most dangerous weapon we've built. 1999. The gospel is preached. Attention is the new currency. A 27-year-old founder in a turtleneck shows a graph of users, not revenue, and walks out with $20 for a website selling pet food online. Your neighbor quits his bank job to day trade stocks he can't pronounce. Your taxi driver gives you a tip on InfoSpace. Even your mother asks if she should put her retirement into the internet. And for a while, the dream pays. The Nasdaq rises from 1,000 to 5,000. People become millionaires on paper. Then, March 2000, the Fed raises rates a quarter point. The algorithm sells. The dream wakes. Clicks are not cash. Users are not revenue. The founder packs his beanbags into a U-Haul. The NASDAQ falls to 1,500. The money doesn't leave. It never existed. It was a story we told ourselves, and the story is over. Rosa and Miguel have 2 kids, a used Honda, a dream. The man at the door says, "Sign here." No down payment, no income proof. He calls it a Nina loan. No income, no asset. Rosa and Miguel sign. Their mortgage becomes a raw ingredient. Financial origami. Lisa, at Moody's, sees the risk, but she also sees the structure. The mortgages are sliced into tranches. The top 60% gets paid first. It gets AA, same as U.S. Treasuries. The logic: some loans will default, but not 60%. That's impossible. The model, built by a 28-year-old physics PhD, says so. Lisa knows the model assumes housing prices never fall. She knows that's insane. But if she doesn't stamp AA, the bank takes its fee elsewhere. She folds the paper. She presses the crease. James borrows against the AAA tranche at 2%, earns 4%, and does it 1,000 times. He sleeps soundly. It's AA. It's safe. It's structured. Michael, a short seller, knocks on doors in Fresno. He hears Rosa's story. He does the real math. In early 2007, he bets $1 billion the origami will unfold. July 2007, Bear Stearns announces 2 hedge funds are worthless. Not down, worthlessing. The paper has unraveled overnight. By September 2008, Lehman Brothers is gone. A 158-year-old bank, dissolved by paper. The Treasury steps in. The Fed prints trillions. They call it a bailout. It's a fire brigade trying to save a city that's already ash. Rosa loses her house. Lisa keeps her job. James loses his fund, but gets a new one 2 years later. Michael makes his billion. The fire was profitable for some, but the house is gone. And what we learned, what we should have learned, is that you cannot fold risk into safety. You can only hide it. And paper, however beautifully creased, however officially stamped, is still paper. It still burns. March 2020. The virus arrives as a whisper. Robert, a restaurant owner in Atlanta, watches his reservation list vanish overnight. He knows what spreadsheets don't. Income can go to 0 in a week, but rent cannot. March 16th. The Fed slashes rates to 0. The gesture is so dramatic it confirms the fear. This is worse than we thought. The Dow drops 3,000 points. The Treasury market, the safest asset on earth, freezes. The flight to safety becomes a stampede over a cliff. The virus didn't break the system. It stress tested it, and the system failed. Not because of a bug, but because of a truth we had forgotten. Fragility, once built, doesn't announce itself. It just waits. There is a moment in every crash when the music doesn't stop. It simply fades. And in that fading, the tower is revealed. It was built on echo. The push is quiet. A rate hike in Tokyo, a missed payment in Fresno, a virus in Wuhan. The tower unwinds, not with fury, but inevitability. We stare into the mirror of the market and see our own face magnified. The greed is ours. The fear is ours. The belief that this time, we will escape gravity is ours. 4 centuries of crashes. One thing remains. Not a law, not a model, a face. Your face. Mind. We have hunted for villains, built systems, written white papers. And still, the crashes come. Because the market doesn't panic. The market is a machine. Cold, neutral, but always panic. We are the engine of chaos. Hope is the most leveraged asset in history. It multiplies in silence. When Rosa signed her mortgage, she was signing for a future she could almost touch. When the baker bought his tulip, he was buying a ladder out of his station. When Newton bought South Sea shares, he was buying proof he was smarter than the crowd. Hope is what we trade when we trade. Everything else is just paper. Fear is the margin call. It bursts through the door at 2 a.m., demanding payment in blood. Fear turns a housing slump into a foreclosure cascade. It makes a AAA bond worthless overnight, not because the bond changed, but because Shua changed. Confidence is the interest rate we charge ourselves. When it's high, we build towers on air. When it evaporates, the air becomes poison. These are the assets that truly rise and fall. They are the only things we have ever traded, no matter what the ticker says. The tulip was never worth a canal house. The mortgage was never worth 40-to-1 leverage. The .com was never worth 1,000 times its revenue. But we were worth believing in. And when that belief cracked, when we looked at each other and saw not neighbors, but competitors, not partners, but marks, that is when the crash came. 400 years from now, historians will look at our age of cryptocurrency, of AI tokens, of whatever dream we build next, and they will see the same pattern. Not because we are foolish, but because we are human. The market will not remember our names, but it will remember our faces. It will remember what we did when the music faded, when the paper caught fire. It will remember that we were the engine of chaos, and that the engine never stops. We are the crash. We are the recovery. We are the story we tell ourselves, and the moment we stop believing it. That is the only truth that has ever mattered. That is the only truth that ever will. If this changed how you see money, hit like. If you think this history should be taught, share it. And if you want the receipts from the ledger they don't want you to read, subscribe. The next story is about how the dollar was born on a battlefield. You won't look at your wallet the same way again. No. Closing reflection on money, power, and time. What these centuries whisper, what they scream, is that money is not metal or paper or code. It is the crystallized form of what we believe about tomorrow. Power is not the ability to print it, but to make others believe the print has weight. And time is the only force that never forgets. Every tower built on borrowed faith eventually meets the gravity of reality. The empire that mints the coin does not own the value. The people who trust it do. And when that trust fractures, when the mirror reveals our own hunger and fear magnified, we discover that the most expensive thing in the world is not gold or debt or even a tulip bulb. It is the moment we realize that the story we sold ourselves was never free, and the bill always comes due, generation after generation, crash after crash, until we learn that wealth without wisdom is the most dangerous leverage of all.